Hello, fellow traders. Welcome back to the Trading Hero channel for our weekly trading results review. In today's episode, we'll walk through the performance of our trading portfolios and conduct a basic technical analysis of the currency pairs we've been working with. Let's start with data from my FX book. This week, all portfolios delivered profits. Let's take a closer look at each one. The $5,000 portfolio, version 1, delivered a 0.8% return over the past week and a 4.4% return over the past month. The $5,000 portfolio delivered a 1.2% return over the past week and a 4.7% return over the past month. The $5,000 portfolio, version 3, yielded a 0.7% profit in the last week and 2.2% over the past month. The $10,000 portfolio, version 1, yielded a 0.5% profit in the last week and 2.1% over the past month. The $10,000 portfolio, version 2, returned 0.3% over the past week and 1.7% over the past month. The $10,000 portfolio, version 3, returned 0.6% over the past week and 2.3% over the past month. The $20,000 portfolio yielded a 0.6% profit in the last week and 2.2% over the past month. The $50,000 portfolio yielded a 0.6% profit in the last week and 2.8% over the past month. The $100,000 portfolio delivered a 0.5% return over the past week and a 2.1% return over the past month. The $200,000 portfolio delivered a 0.6% return over the past week and a 2.5% return over the past month. Now let's move into the MetaTrader and review our trading activity directly on the charts. We begin with the Australian dollar against the Canadian dollar currency pair. We're looking at the 1-hour time frame, with each vertical line marking a new trading day. The gray rectangle highlights last week's trading zone. The profit figures you see on screen are based on a $400,000 portfolio. This is essentially our standard $200,000 portfolio using a 2x multiplier, as the account has grown beyond $400,000. Starting with a basic technical analysis, the downtrend continues, with the market pushing to lower local lows. Zooming out, we're still in a broader uptrend, but momentum has clearly shifted. This week marked the start of a correction. We expect the market to move toward the nearest support level, where a consolidation zone will likely form. We've got a number of open buy positions, which presents a great opportunity to increase exposure at lower prices and potentially close all trades with profit on the next upward correction. Overall, the algorithms traded very efficiently this week, delivering a profit of $617. Next, let's take a look at the Australian dollar against the New Zealand dollar. We're seeing a similar picture, but here's what's interesting. While the Australian dollar is still in an uptrend overall, it's gaining ground more slowly against the Canadian dollar and New Zealand dollar, resulting in a more downward-looking structure. Previously, the Australian dollar against the Canadian dollar had a strong multi-week uptrend, but as always, trends don't last forever. What we're seeing now is a clear correction. From a broader perspective, last week already gave us signs of potential weakness in this pair, so it's no surprise the market continued its decline, breaking through previous local lows and continuing downward. Our main strategy here remains the same. We've got open buy trades, we'll continue to average in and wait for a bounce next week. This week's profit, $237. Moving on to the Australian dollar against the US dollar, here we're back to an uptrend. It's clearly visible, although that trend seems to have slowed down. We reached a local high late Monday night, but after setting that high, the market began to pull back. This suggests a consolidation phase could take place during the coming week. Currently, there are no open trades on this pair. This week's result, $199 in profit. Now let's review the euro against the British pound. Here we see a downtrend, but the market has already broken out of that trend. You might ask why we draw the trend line from this particular high. Although it's not the absolute maximum, it reflects a strong impulse move that was quickly absorbed, which is why it makes sense to track the price action in this channel. The market approached a previous consolidation zone we mentioned last week. Zooming out, we can see it's a broad and strong support zone, and the market has stalled there. After 2 failed breakout attempts, buyers stepped in. So, going into next week, we expect a rebound, potentially moving back toward the previous local highs. We'll then assess if the buyers have enough strength to push higher or if we return to consolidation. We currently have a few open sell positions, and this week's modest profit came to $103. Next up, British pound against the US dollar, easily our most active pair over the past few weeks. Despite the week starting with new local highs, things turned in our favor as the market began to decline. After reaching the previous consolidation zone, price temporarily bounced, but then returned to the zone and is now consolidating again. From our point of view, all signs suggest further downside. Looking at the daily time frame, we use several indicators, including the range, high to low, of each candle. For example, 1.1%, 1%, 0.92%, and so on. Our threshold for signal candles is 0.9% of asset value. We also watch for consecutive candles of the same color. A series of strong green candles often signals a market peak, particularly at key resistance levels. That's exactly what happened at the end of last month. A strong candle formed and a reversal followed. Right now, our take profit level is between the second and third most recent positions in this trade grid. Unfortunately, last week's correction wasn't quite enough to hit it. However, the market's response to the new highs was promising. 3 out of 4 days closed lower, and the week overall ended in decline. Also, we had 6 green candles in a row, suggesting the market was overbought and due for correction. We may not expect a full 3,000-point move this week, but we're likely to stay within consolidation, which will help reduce drawdown and potentially set us up for a new leg down next week. This week's profit, $583. We successfully closed sell trades held since last week, followed by buy trades which also closed with profit. Now let's move to the British pound against the Canadian dollar. This pair gave us a very favorable setup. After 2 weeks of consolidation, the market finally broke below the support zone, signaling weakness in the British pound. From a broader perspective, the uptrend is fading and sellers are gaining strength. We're now trading below the previous lows and we've got a few open buy positions. If the market continues lower, we'll average in and aim to close trades on an upward correction. This week's profit, $90. Next is the US dollar against the Canadian dollar. We closed a buy trade chain and a sell trade. The market updated its local lows, confirming a clear downtrend. On the daily chart, this move actually began back in February. There's still some distance to the next support zone, although we might see a slowdown near a former resistance from early 2024. Our base scenario remains continuation of the trend down to support. And finally, the New Zealand dollar against the Canadian dollar. This pair remains stuck in a sideways range. We've seen attempts to break out both up and down, but last week's price range held steady. On the daily chart, we can clearly see a downward bias, which is good for us since we're holding a sell chain. We're waiting for the price to drop to a level between our second and third most recent orders. This week's profit, $610. That's all for this week's update. Let us know what you think of this new video format in the comments. We're preparing some website updates and exciting changes in our product lineup, so stay tuned. Make sure to subscribe. There's a lot more to come. See you in the next market review.